Good morning, everybody. Hey, welcome to Wednesday, the 15th of February. We're over halfway through, and mixed bag yesterday. We'll talk about that and more when Dave joins us here in just a few seconds. Before we do that, though, let's not forget that there's only a few things that we can control when it comes to investing. And one of them is how much risk you have in your current portfolio. To figure that out, give us a call, 863-382-0037, to go through our core retirement design, where we help you design the retirement you always dreamed of. We got Dave coming up next.
The Culture Club there at 105.7 Light FM. We've been kind of noodling through the economic reports that came out this morning, and if you're in the stock market, well, I guess we're back to good news is bad news, right? Yeah. Well, I got good news this morning. That's great. Let's find out what's going on with your money with help from Phillip Statler from Statler Financial Services in downtown Sebring. Phillip, good morning. How are you?
Good morning, Dave. Hey, doing well today, halfway through the week, and actually a little bit more than halfway through the month of February. So I wish the markets would just make it look a little bit prettier.
It sure would be nice. Oh, yeah, I'm looking at my delayed quotes, and everything you told me was happening when he first got on the phone appeared to be doing it. Earlier during the earnings season, meat of the season, where we really had the heavy-duty reports coming out, 150 of them a day, we kind of turned the corner, and good news generally meant good news to the market because, well, they were figuring that meant guidance from the stocks that they were buying and selling would probably be more positive. Now we're back into our normal mode where I get good news on the economy and the traders on the stock market are saying, oh, shucks, let's sell everything like chiclets. Retail sales this morning, 3% increase over last month. They were expecting only 2%, and that's the biggest increase since like 2021 in a single month. Pull the automobiles out, and their prices are up. We know that. It's still more than double what they expected, 2.3% increase in retail sales. Phillip, we're spending money like drunken sailors.
Yeah, and that's really kind of surprising. To say the least, coming off of December where retail sales were down, and now maybe January, everybody's taking advantage of the after Christmas sales. I don't know, but to see it go up that percentage is incredible. And let's face it, the Federal Reserve is not going to like it.
And that's where the good news, bad news thing gets in because, okay, our retail sector, at least taking a snapshot in January, was absolutely booming. That's great news for the economy. We're weathering the increases in interest rates and everything looks really good. But then the Fed says, oh boy, we're going to have to jerk them up a little bit farther in order to tamp this mess down because this is exactly what they don't want to see. So good news is bad news and the market's responding to it, isn't it?
Yeah, the only maybe bright spot is that we've got another cycle to happen before the Fed meets. So the Fed will see another set of these numbers in March, giving them the February numbers, and that's our only hope, is that those things show some retreating, that will give them some indication that, hey, we're doing good. Maybe we don't have to raise interest rates at 0.75%. Maybe we can only do 0.5%, because at what I'm seeing right now, I wouldn't be shocked at a 0.75% increase from what I'm seeing.
Mm-hmm. Yeah, conventional wisdom right now is kind of baked in just 0.25% increases for the next couple of Fed meetings. So if they went back up to those 0.75% numbers, I can just imagine what the markets would end up doing. Other reports out this morning pretty much kind of confirming what we had. The Empire State Manufacturing Index just absolutely tanked last month, and they weren't expecting a lot better. Well, we got a lot better than they expected. They were expecting an index of -18. And again, the ingredients for these indexes really aren't relevant because they're always a different formula. But it was -18 expected. We ended up only -5.8, which means the New York district is doing better than anybody expected it to, which once again, economic activity, Federal Reserve wants to slow it down. That's not what they're looking to see.
That's right, Dave. There is not. And so it's going to be interesting to see. With all the numbers we're seeing now, it's, who knows what's going to happen. The only thing, like I said, the only hope we have is that the numbers coming in out of February are going to show that that we're heading in the direction the Fed wants us to go before their meeting.
It feels so weird cheering for the economy to tank, but that would at the very least calm the Fed down a little bit. Really, about the only thing the interest rate increases seems to have done so far is choke off mortgage applications, and they respond almost immediately because mortgage rates do. I mean, mortgage applications fell by another 7.7% last week, and that's about the only indication that we've got, the housing market, that the economy is slowing down with this tight money policy.
Yeah, and I did read something the other day that really showed that even though mortgage rates are going up, it's not having a huge impact on housing prices yet. I mean, they're falling a little bit, but not by as much as you would expect. And then on top of that, I think that what's happening is there's real estate staying on the market maybe a little bit longer than what it was before, and they may not be getting quite what they wanted for it, but we're only seeing prices drop 3 to 4% right now, and that's not much given the increase we've seen in interest rates.
That's interesting from a national point, because a few weeks ago we were talking about what was going to happen to housing prices, and we both kind of agreed that this market around Highlands County is kind of a little bit of an exception because we're insulated by the influx from the coasts and from up north against precipitous housing value drops. But, my place is down by about 2.5%, and I'm not overly concerned about that. And if the drops aren't precipitous nationwide, it's not even choking off the housing market that badly yet.
Yeah, not yet. I mean, and it won't take much for that to reverse itself, but at least right now, that seems to be the way things are going.
Anybody that lived through 08, 09 knows it takes almost no time for a housing market to crash. So it's a pretty volatile market when things go completely south. So we'll keep our fingers they don't go that way, right?
That's exactly right.
Absolutely. So we've got economic factors actually looking real good, which means they don't look real good at all for the market itself. What can we do about the issues that are actually reporting? Kraft actually reported this morning. Did they end up giving us anything to be happy about?
Kraft, they didn't. Now their last quarter report was good. They beat on earnings, they beat on revenue, but they gave some numbers. They gave some fiscal year numbers, and those are not what analysts expected. They said that they expected that their full year earnings would come in somewhere between $2.67 and $2.75 a share. Well, the consensus estimate among analysts was it should come in at 277, and so that's got Kraft heading in the negative light right now. Not by much. It was down by almost 2% earlier. Now it's down by about 0.2%. So
actually, with a guidance miss that big projected, I would expect it to be a lot worse than that, wouldn't you?
I would too, but I guess maybe because it's a consumer staple and some other things there that maybe that's helping them.
I don't know. Who can live without cheese?
That's right. Exactly. And some of the other stuff, right? You got to have ketchup.
That's it. So, yes. What you got?
All right. So we've got some other things coming out here. Let's look at the travel a little bit because we talked about that a lot this last week and a half. Airbnb reported. And their fourth quarter, they beat expectations. They reported 48 cents a share on their earnings side versus 25 cents that was expected. So almost double what was expected. And revenue came in slightly above expectations. But you got Airbnb, a pretty good winner today, up almost 8.7% this morning.
Wowzers. I'd made the observation yesterday. I remain amazed at how resilient travel and lodging stocks have been through this period.
They have been. And let's just keep with travel for one more. We have TripAdvisor reported as well. And they came in and beat on revenue, earnings, and cash flow for this last quarter. And they're trading up 9.5% this morning.
Wow.
Yeah, I mean, travel seems to be doing pretty well. I mean, so that's now let's see if we can hold it all the way through the year. That may be the key.
That'll be it. If the guidance holds, it's going to be a good year for those two companies.
It will. So the other one that we in Florida are really familiar with, a company called Generac, right? The whole house generator company. And they posted a beat for this last quarter as well, in terms of earnings per share. Now their revenue was a little bit less than expected, but not hurting them this morning. They're up a little over 0.8%. And then we've got
they're just going in from this climate area anyway. They're just going into peak sales season now.
Yeah, that's right. Getting ready for I don't think they've had an unpeak sales season since the last hurricane.
I think so.
Then we had I'm trying to look here real quick and see which one we've got. We've got Roblox, which is the online gaming platform, and they really had a good quarter. They were up 2% year over year in revenue, and their bookings, I guess that's one of the key indicators for them. Their bookings came in at almost 900 million, and they were expecting just a little over 875 million. And so that's got Roblox is probably my big winner today, up almost 17.5% this morning.
Well, I wish I'd bought them yesterday. I'll reset the table here for yesterday's progress. It was an off day on the blue chips and a slight up day on the adventurous stocks. The Dow was off by 156. The S&P was off by 1, but it was still a red day. Over on the Nasdaq side, they actually gained a little over 0.5%, up 68 points yesterday, which kind of defied some expectations given the fact that we were concerned about inflation. 45 minutes before we open, I've been watching my delayed quotes going up and down like a yo-yo, Phillip. What are you looking at in real time?
I got a lot of red ink today, Dave. As a matter of fact, I can't see any green ink except for the VIX right now. We got the Dow down 1/3%, the S&P 500 down 1/3%, the Nasdaq 100 down 1/4%. So the big loser today is actually the Russell 2000, down 0.9% right now. On the other side, the commodity side, we've got silver. Man, it's been really volatile the last couple of weeks, down 1.4%, $21.57 an ounce. We got gold down almost 1% this morning at $1,847 an ounce. And then crude oil is down almost 1% as well at $78.26 a barrel.
I think it's about 75 cents a barrel less than it was yesterday at this time, too. So I like that trend overall. Overseas markets, Europe looked at us from yesterday, or rather the Asian Rim looked at us yesterday and predominantly sold. It wasn't a catastrophic day, but it was definitely red. Europe is kind of interesting. They're evidently looking at our retail sales report and saying, okay, we're doing pretty well. Screw the market. We're just going to trade up because their issues are up by as much as 1% in France halfway through their day today, which makes the rules of thumb completely go south on you because they normally follow us, and it makes it even harder to plan a retirement if you're trying to do it on your own. Getting the risk out probably counts for a lot, Phillip. How do I get a hold of you to get some control on my retirement?
That's exactly why we developed our core retirement design. Give us a call at 863-382-0037 to schedule your core retirement design phone consultation. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. at noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
And we'll be back here tomorrow morning to try to explain what the government does to us tomorrow, because it seems like it's something different every day, doesn't it?
It sure does, man. You have a great day.
You too, sir. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, Ken, folks, I want to thank you for joining us today. Have a great day. Join us again tomorrow. Same time, same place. Until then, have a great one.